Myself and Peter went to site. We went to Timmins. We met up with Dale and Carl, Matt from Darouge, who do all our geological services, and we went to look at a rig. Met the guys on the rigs. We had a tour around the site where our project is. I mean, we're 40 minutes out of town on a gravel road, so very easy access. Timmins is a great place to operate out of. It's a big mining town, lots of big mines around there. So we got a feel for all of that. Then in the afternoon, Rob arranged for us to meet Stan and Tim, the two Indigenous leaders, from the project. We've got two Indigenous groups on our project area. And we had dinner with them. We had a good chat about things, how we're going to do it, what we're going to do, how we're going to communicate. I thank them for the endorsement they made on the project, which was great. The guys are understanding what we need to do. Rob, our Indigenous Affairs manager, is keeping on top of all of that. So he facilitated the whole meeting, which was really well done. And then at night time, we all went out for dinner and we had a good chinwag, watched the Stanley Cup, and, it was great. So then when we went to Toronto, we met up with, potential investors, went to the Office of Economic Development in town and spoke, told them about the project and what we're going to do and how we're going to kick it off and, the continuation of the work that's been done. Met up with some guys who's invested with the group before in the past on previous projects. So, it was a kind of, hey, we're here, we're doing this is what we're going to do. And, we've got to go now and raise some money so we can execute on that. So, and as you mentioned there, just recently we've done the raise for 11 million bucks, which was great. We had support from existing shareholders, new people, management, directors. So, in this market, I think a lot of people have, I was at Diggers last week and said, you guys have done well raising 11 million in this market. But that's great because, why do we need 11 million? Well, we need 11 because we need to do the work, right? We've got to drill, we've got to do all the met work. And so yeah, it's been busy, but it's been good. It's been great. So if you look at what we've got to do, so let's start with the ore body, the drilling, right? When we were on site, we spent quite a bit of time with the geologists and they took us through all the drilling that's been done to date. This is on the nickel. And it became very clear from, let's say, the trending that we've done on the results that we've got to target areas that have high sulfur and nickel, right? It's the sulfur that we're going to be floating. You get low sulfur, it's going to be difficult to recover. High sulfur, that's where the best grades and the best recoveries will be. So we spent quite a bit of time putting together and talking about the drill program that we're executing now. Where do we want to drill? Why do we want to drill there? What do we want to achieve out of the drilling program? So at the moment now, we announced on Monday, we're drilling at the B2 zone at the moment, which is at the top. And what we did there, we did some extension drilling. So we announced that we found sulfide. We've extended that another 450 meters from the previous hole. Big intersections. What we'll be doing as well is some short hole. So those high grade areas that we've got in that area, we'll be bringing them up to surface and we'll be doing some long hole as well. So the long hole actually, where those high grade pods are, that will be how far does it go down? Short hole, bringing it up to surface. The long holes will be pulling it down. Essentially what we're really trying to do is improve on our measured and indicated category. And obviously with that, we'll get a kick up with the grade as well. Big objective for me really is to try and get that 0.2 something out the way, and let's make that 0.3. So yeah, that's a big part of the work we're doing. And then obviously once we've moved from the B2 zone, we'll go down to the Bardwell and we'll do a lot of infill drilling there as well. And it's exactly the same, short hole and long hole extension. Excuse me, we've got an area to the right called the Hook. We know Falconbridge drilled there. So when in winter, when the cover's iced over, we can get across there and then we'll start to drill there as well. Have a good look around there. So So yeah, look, there's about a 6,000 meter drilling program being executed on top of the 28,000 meters we've already done on the ore body. So, you know, roll forward to March, April, I think we'll get a resource update. I think the grade will change. And I think we'll be able to then understand exactly potentially where the pit needs to go. So that's a big part of what we need to do. But we can't do that now. We just don't have that information yet. Another big part of the work we need to do is the MET work. And obviously that's flow sheet development. We know this is sulfide. We know it floats. The guys previously did, ball mill float work, you know, got the recoveries, got the concentrate grade, the 10% plus that you need. You know, that's kind of like the magic number for the smelter and the iron MgO and all of that. So what we're going to do now through the directive of Greg Lane, who we've appointed as our like technical consultant, is put this flow sheet together. So existing core, new core will all get fed into the program. So two big packages of work there. And obviously a lot of what we've got to do now as well is continue to communicate with the market about what we're doing, what we're finding, you know, news flow, just getting the story out there. So. You know, if you look at this team, I mean, Hugo, Rob, Malcolm, and Peter, you know, I mean, Peter's been the CEO of, you know, with Lionel, and then the CEO of Mantra, and then Asenco. And these were three very different projects. I mean, Lionel was this company that was built, you know, over a period of 10, 11, 12 years, kind of, you know, 2,000 tons of nickel to kind of, you know, 80,000 tons, 85,000 tons of nickel. So over a relatively short period of time, essentially had, you know, ended up having like 8 mines under its umbrella, you know, global kind of mining company. And then, you know, we were bought for just shy of $7 billion. Lot of operating, a lot of blood, sweat and tears, you know, because you're operating mines and it's all about making the target, right? You've told the market, this is what you're going to achieve, and the market want to see that. And you'll get punished if you don't, and you'll get rewarded if you do. It's as simple as that. So that was very an operational kind of focus with Lionel, and then obviously the growth and everything like that. So then you go to Mantra. I mean, Mantra was a uranium project. I had some uranium experience, and, you know, a lot of the guys didn't, but we learned, you know, it's the principles of putting a feasibility together, you know, doing the right thing at the right time, you know, making sure that as a group we discuss, we make sure that we understand where we're going, what we're doing, what we're spending the money on, why we're doing, you know, a certain activity at a certain point in time in the feasibility kind of chain. So yeah, Mantra, you know, we sold for $1 billion. And again, I think, you know, companies get into those positions because I think people understand and see the quality of the work that's being done. I mean, at the end of the day, that's what people are buying, right? With Lionel, you know, they bought operating assets, and assets are what being operated well. With Mantra, they bought a file that had a design for your uranium mine, which cost, you know, a lot of money to develop, but the work was quality work. With Asenco, you know, Hugo built the mine there, and again, it was a operating gold mine, big gold mine in Ghana, and Goldfields came along and, you know, did the JV, and you know, the rest is history kind of thing. So you look at that with Aston, and it's almost like, well, this is what you know, right? I mean, I can't fly a plane, but I can get my head around what we need to do when it comes to a mining project. And with Rob and with Hugo, and, you know, Peter's always been there to guide and to lead, you know, and now he's there as the chairman and he's doing the same thing. So we're very fortunate having that leadership. But, you know, what I've just described there was kind of like a 20-year big part of your career, you know. I mean, I was 35, you know, 32 kind of stuff when, well, I was 26 when I started at BCL. But so, yeah, you know, you blink and that time's gone, but you've got that learning. So Aston's going to be no different, right? We've all got a bit older. We've got a bit more experience, probably got more of a voice now than we did maybe 20 odd years ago. But yeah, we'll apply all those principles that we did to those projects and those operations to Aston. Because to be honest with you, it's how you do it, right? That's all you know. So, and I think it's important. I've been saying to the market, and I'll be saying, through announcements, this is the work we're doing. I want people to understand the raise that we've done is to pay for this work. And we need to get to the next position, but we can't get there until we've done this work. We've done this drilling. We've done the flow sheet development. That's important. Then we understand, well, where is the pit going to go? And then we can get into a scoping study. So I think we're being quite responsible in terms of, making sure we just do all of this reconnaissance work first prior to, executing a scoping study. So, and I think people are understanding that. So yeah, that's what's going to be happening over the next 6 to 8 months. What do I think about that? Look, the Canadian government have been very vocal on their policy, the critical minerals policy, which published the end of last year. It's a great document. It's important to understand that. Nickel is a strategic critical mineral for the Canadian government. And, some way down the track, I know that there'll be a conversation and a discussion around this project. It's a massive asset. It's a huge ore body. And I think in my head, I say, doing all this work that I've just described, once we've done that, then we'll be able to go to the Canadian government and say, look at what we've done here. We've got real, basis for a mine here, right? This is going to be a $1 billion project producing 35,000 tons of nickel a year, for the next 40 years kind of thing. It's the start of another Sudbury. And Canada gets nickel. They love nickel. It's a real commodity that's been in the hearts and souls of a lot of, particularly in Ontario, big nickel kind of province. And I think, you talk about strategics, you talk about, the battery manufacturers and the car manufacturers, and the Canadian government are fantastic when it comes to facilitating meetings through InvestCan, Global Affairs, Natural Resources. They're the three kind of ministries that in Ottawa that can help facilitate that those discussions with end users, strategics. So that'll come, and it'll all come without a doubt. I think mining companies, we've seen it with Canada Nickel, Anglo American bought 10% of Canada Nickel last year, I think for $25 million. And to me, that just shows that the big tier one mining companies are looking and identifying the smaller guys and saying, well, that's worthwhile investing in that, and let them get on with their work and then see where it gets us. So, and I know that a lot of companies are wanting to get into the nickel space. There's companies that are already in the nickel space that want to continue to keep their portfolio or increase their nickel output. So I just think it's a matter of time, to be honest with you. But again, why that happens is because people buy quality work, right? They buy a quality team, they buy quality work. So it's important that we deliver on that. So, and that'll be our focus. Sure. If you think about, we've raised this money, we've committed to doing this work. So 12 months time, I think we'll have a new mineral resource. I think, with the drilling we're doing now, I think the measured and indicated would be increased. It's a big part of what we need to do out of this drilling campaign. I think the grade would have changed. We'll have a flow sheet, and we'll know some pretty basic economics about the project. I think 12 months time we'll certainly be into a scoping study. So we'll be, putting designs together and, CapEx and OpEx and, it'll be exciting because that's the basis, right? That's the foundation of okay, well, is this thing a boy or a girl kind of thing, right? Well, this is what it looks like. And it makes sense. It makes money. So yeah, the next 12 months is going to be everything we've discussed. I'm going to continue to build my relationship up with, the First Nations groups on our project area, engage with government, local and obviously federal, get the scoping study going, and, continue to communicate the story with existing shareholders, new shareholders, and, hopefully, we'll get traction out of that, and, our market cap will increase, and, we will deliver on all of these things that we need to do over the next 12 months. So it's exciting times, and we've got a great team, and they've done it before, so I'm sure we'll give it a good crack, right? And we'll probably do it again.